Good morning. Excuse me. Good morning, and today is Friday, September 15, 2023, and it's the last trading day of this week. And we have a CBI release on Wednesday, and on Thursday we see that it rally up. But today in the pre-markets, you see a huge sell up right there. So it already checked out the low of Thursday, Friday right there. And this candle look like, I think it's gonna check out the sell cycle from this one. But let's see. All right, the bell is ring. So if we want to go short, we want it to go to retest this, right? Here's the 1 hour time frame. Let's turn off the fair value gap. So we want to see if this bullish breaker hold, or we're gonna be break it. Just, yeah, exactly right here. Yeah, right. Okay, so it's break through that bullish breaker already, which is a resist the support area. Yeah. Yep. Retest, and then now it went down. And remember, today is also the so-called quattro quitchings, which is the option expiration for a quarter. So it's very huge. That maybe explain why it dropped very heavily in the pre-market, because you know, when the market maker, they sell the option, right, and they want the option is to expire worthless. That means there are lots of people buy call up here, right? When the stock go up yesterday, a lot of people going and buy call, and in the pre-market, the market maker, they sell the stock a lot, the underlying stock a lot, and that will bring the price excuse me, the price down. And yeah, bring the price down in order to make the option expire worthless. So that may be the reason. And also we want to take a look at the volatile now and 3 month. So here's the VIX between now and 3 months from now. So when we see this number is above 1.2 or near 1.2, we know that it's gonna be bear. That means 3 months from now, people project that the market will be sell off, or the price will be lower than the current price. So when you see right there, then you see the huge sell off right there. That can explain the reason why. So it took out the low of yesterday. So on the 1 hour time frame, we see it's bearish right there. Let's see if close below this bullish breaker. Here's the daily chart time frame. You can see how volatile. I mean, look at the Wednesday, and then the Thursday is huge gap, and on Friday it also started huge gap down, huge gap up, huge gap down. So it's very volatile. It's very hard to see the pattern right there. Yeah, so it looks very bearish. I think it may come down and take this sell liquidity, right? Because if you look at a short setup right here, huge gap down, you can treat this as auto block, huge gap down, and this is the retest of that gap, right? And the retest, and it failed to break, it coming down, and it try again, it make a swing high, but it cannot, take the buy side liquidity. So however, if you think it's a long setup, you can see, wow, it is a liquidity buy side liquidity trap. If you think that it's a long, but I think it may go, we think that it may go and take the sell side liquidity from here, which is 442 level. Yep. Very interesting right there. Yeah, so here's a huge breakdown from this bullish breaker right there. Well, if we look at the option price for the 449, you see when it's open, it's only about 89 cents, and now it jumped to $2.56. Man, that's is like almost 50% jump right there. Wow. So whoever, this is the put option, right? Whoever hold a call, they are in a very panic situation right now. They have to show it. No, not show it, but they bought the call, so it's become worthless right there. That's how the market make money. I mean, let's see how much it jump in terms of percentage, right? So you have $2.56 minus 0.89, so that's a difference right there. And this one divided by 0.89 times 100. Wow, so you have a 187, how much? 200% increase for your option right there if you bought it at open right there. Alright, here's the weekly candle. You see that? So it opened in the mixed trend, and then as soon it checked the buy sell liquidity, or it created equal high, boom, it going down. Yeah, let me see, the high of this candle is 51.06. And what the high of this candle? Yeah, you see that? Oh man, 08, 51.08. As soon as it checked the buy sell liquidity, boom. Wow, we didn't watch that. That is the lesson learned for us. We see that as soon as it take out the one is 06, right? And this one 08. You see that? As soon as it just, if it open above this candle, then we have a reason for it to go up. However, when it open in the middle or below this candle open, and then it's going and wrap or rate the buy side, then we know it's gonna come down. And that's exactly what's going on right now. Yeah, that's give it the reason why it come down. Wow, a very, very wonderful lesson for us right there. Because if you look at the weekly candle, you see the short setup is still playing out, right? Order block and the huge displacement and fair value gap, you see there, fair value gap right there, and this is the retest of this fair order block and fair value gap right there. So it will come down. I think it may come down and take what, either retest this order block right here on the lower end, yep. For us, we don't see any setup right now. Wow. Definitely we cannot go on short right here. What the reason? With the setup, we don't see it. Right. The best setup for it is right here. You see buy sell agree was taken, and then boom, it go down. Definitely we're not gonna try to go long today. Because there's no, we don't see any bottom right now. Well, we may have a setup right here, right? We may put the entry right here and a stop loss above this bullish breaker from 1 hour time frame right there. So far is a downtrend, right? When a downtrend, we mark all the swing high, because in the downtrend all the swing high is gonna be short. So right now this swing high still hold, and this swing high to still hold. That is the market structure 101 right there. Okay, as long as it's below this swing high, then it's still in the downtrend. Remember yesterday the beautiful market structure shift assemble. Let's take a look at that yesterday. It is this one? No, that's one. Let's look at 1 minute time frame. You see, so it's in the downtrend. We mark the swing high. As soon as we saw it's glow above that swing high, we know that market structure shift. But the trick is don't go in right away. you have to wait for the last sell-side liquidity sweep and mark the first time it make a high or low. Right after it make a market structure shift, make a high low, then mark that, because it's gonna go down and sweep that liquidity one last time. And you see that it go down, it sweep that, and then it make one last sweep, and then boom, it go up. And all of this is taking place around 10:30 or so, 10:15. Then you have a high probability between time and price right there, and the liquidity pattern right there, liquidity run pattern. Then you can go right here for sure. We go in, and yesterday we see that up moves about $2.86, so it's a huge setup for it. So we try to put this setup, burn it into our brain, so next time we can see it before it's forming, or we can see it when it's about to form, so we can confidently going and take a long position right here. Very low risk, you see. You should put 5 cents, 10 cents below this order block. Then we are good for the run up. So this another swing high right here is still high right there. So we are in the 25 minutes. So we are just patient, watch liquidity run and learn, and we will take the trade when we see a setup that we saw before, and we want to test it. Then we will take it. Otherwise, we just patient, watch and learn and analyze, see how the liquidity were forming, and how the algo gonna run to the liquidity. Wow, we're gonna go down to this new week opening gap high right there. Yeah, look like we're gonna tap into this level. And if we look at, yep, we tap the level now, which is the close candle of the prior week right there, the close candle of prior week right there. This can be a good setup for us, right? If we see that the prior week is a down low candle and the current wick is open in the mid range and it go up, it just barely, if it barely reach the liquidity buy side, then we can go in and short them. Yeah, that's exactly. Let's look at the 1 hour time frame. You see this level that we are marked out yesterday. We see the fair value gap, order block fair value gap, and it just go there and touch, just barely touch that level, right? I think it's 80, 51.06, right? 08. So, and we know that last week is what? Yeah, the week before that is right here. The high of this candle is 06. Yeah, 06. It just simply rate 2 cents to trade the buy side liquidity right there, and then boom, start going down. Ooh. Yeah, I think we need to take a screenshot of this and make some observation right here. So basically this is open at the mid range of the prior week. Okay, and that is by celebrated and go down, right? So basically we have the high is 445.08 right there. And actually we already know the high right here. We just put right here. The high of this is 06. Right here we can look, we see 08. We just need the high of this. We know this 08, 2 cents above. Little bit no right here. By sell rate the 2 cents. You can say 445.08. So we just sit right there. If we do this, then yesterday before the close, we can short them, or we can buy a put option. Then today Then we can say the game plan. Let's close. Friday, which is in this case Thursday, right? We are the short or buy put option. That's our game plan right there. Yep, you see at the close yesterday we short right here as here. That means the roller yesterday it just a liquidity trap. You see, it dropped huge. So if we want, we short at the open, at the close yesterday, or at the high right here, we short them. Amazing, it go up there again. Ooh. Yeah, we have to give room for it to work the trade. We have to put a stop loss above this. Otherwise, if we put the stop loss too tight, we got kicked out right away. Because if we anticipate a huge down move, right, then we have to give enough room for the trade to work out first, especially if we hold overnight. Okay, so we see the market structure shift right there, right? It break out the high, right? So we see the market structure shift, and then after the market shift, we want it to go to retest this one, this order block, the first order block. We see order block, fair gap, we want to retest that, and then it come down, we check that order block, and it's gonna go up. What time is it now? After 10. What do we see from yesterday? 20, and this order block around 9:55. This order block about, wow, it's about the same setup you see right there. But what else we want to see? We're going to go in and then pull back and then take out that order block, that buy sell liquidity, and then one more sell liquidity sweep, then we can go in. Basically we want right here, retracement right here, and then boom, we're gonna check this one. So it check out the low of this order block. You have a little bit retracement here. It's not exactly like yesterday, but very similar like yesterday. You see, you look at a screenshot. You see, very similar right here. It have up 3 up close candle, and then it go down and check that order block. Exactly, it happened. But right here, you only have 1 up close candle instead of 3, so it's a little bit different. Okay, and then we wanted to go up here and do one more sell side liquidity sweep, then we can go in, go long right there. But look at the weight right here. It make a swing high right here. It got different from yesterday. Yesterday you want a very sharp, very strong up move. in order to make a market structure shift, but we don't see a strong move. Yeah, it's strong move, but it have a little bit consolidation right there. So basically it dropped more sell-side liquidity. But we don't see it make a high low yet. Yesterday we see as soon as it make a market structure shift, it make a high low. First time high low right there. So it give you some idea that it will be reversed, but right now we don't see that signature. We don't see it make a high low, so we're not gonna go in and long. That means when it's those signature is not present, that means we can go and short them. Oh man, look at this option price. If we go in right open, we buy the put option 89. Now we have 3 times our money. So if we 1,000, we got 3,000. If you put 10,000, you got 30,000 back right there. Wow, that's the power of option. However, if you get it right, but if you get it wrong, you have to better get out fast. All right, be right back. come back. So you see the market structure shift right here, and then it went down and check sweep sell query. Okay, then we have auto block right here, right, and we have failure gap right there. So this is a retest. So far, yeah, after it make the market structure shift, you have to check out the sales liquidity, right? Is that happened yesterday, right? After it take the market shift, you have to make the high and low first, and then from there it make another leg down, check out that's order block, the sell side liquidity from the order block. But this not happen last way. It make, yeah, it not exactly, but the ballpark is the same, right? After it make the market structure shift, it need to sweep that's sell liquidity. It did, and it make another retest. But right here, let me see, it's different. That's amazing. It's around 10:15. The time is almost similar. But look, but the yesterday different, right? It make it's on the up move, and then this is a retracement before it continue to go up. But today the contact is different. It's huge move down. Okay, it come from the top, right? Yesterday is from a consolidation and moved up, and then retest, go up. But the contact for today is different. It's on the top, and then it show up moving down. Take a look at the yesterday. I want to take a look at yesterday weekly candle. Okay, so yesterday right there, we see the green candle for the week yesterday, but now it's turned into a red candle. See that red candle right there? So if we're going to go in at the close yesterday, then we have to have a strong conviction. You know why? Because yesterday it still showed that it's a up close candle. But if we see the pattern like play out today, then next time when it show up, we have something to back it up, right? We have experience. We saw the pattern before. So let's say couple of weeks from now, when we saw the pattern, we saw that the wick is open in the mid range of the prior week, and then it just at the close it just hit 1 cent, 2 cent, or even 5 cent above the prior week, then we know that it just rate the buy side liquidity is gonna come down. Yep. So that's our game plan right there. The question for us, how do we know is the buy side liquidity rate or gonna be market structure shift up and it's gonna be continue to go up? Sometimes we don't know for sure. If 50-50 and in a very very high probability there, then we just take the trade because we manage the risk right. If we right, we get 1 to 3 risk to reward ratio. Then even though it's the 50 win rate, 50 with 50, we still end up, in upper hand. We still end up, making money. So that's today. As soon that we see that it rate the prior week liquidity high, it's 08 rate 0106, then we can go in and short them right away. You can short them right here. You can short them right here. It's the retest. You see out of loss retest. You can short them right here. You can buy the put option right here. It gives you the entry right there. You see, and it's go back to the question whether we know it's a market structure shift or the liquidity rate. Then this here the answer. Look at the low time frame. On the 1 minute time frame, you see that as soon as it rate, it have a huge displacement and failure gap, and then you have retest going down. So that gives you the signal that is it's not a market structure shift. It's just the liquidity rate right there. Yeah, let's put it in our journal now. 06. Oh, 6, right? But it basically prior week high, right? It just straight right there and then it come down, and you see a retest right there. We can say signature right there. How do we know? It's the signature. In this case, it's just 2 cents above the private week high. And then you have like displacement plus fair value gap. So that's the signature. You know that it's just a liquidity rate. It can come down. And then we have a retest at later time, 1512. Right there, it gives you the signature right there. Beautiful right there. I give you 3 signature right there, 3 condition. I mean, let rewrite this verbiage, make it clear, not be a condition, right? What is the observation? What a condition? What we try to do right here, so we can write out the conditions. So next time when we take the trade, we just do a checklist, make sure it's matched with condition, then we go in with conviction. Reason right now we don't have much conviction because we don't know. We don't know what can happen next and what we need to looking for. So that's which way we have to write out the observation, so we know what we're looking for in the next trade. Condition of a buy side liquidity rate on a weekly candle right there. Yep. And right here you have the setup. That's the beautiful one right there. So basically the setup that we come up is called Thursday at close. Yeah, I think say Thursday first. Thursday as close. At close, short setup. Basically, we observe the weekly candle, right? We see that is the open of the week is in the mid-range of the prior weeks, right? And as soon as we saw that the buy side rate were rated, then we know it's gonna come down. Our game plan is gonna buy, we're gonna short as soon as is rate the buy side liquidity, we short them. And we have to give, in this case, remember we have to give the stop loss a little bit wider because we have a huge potential down move. The best way to do that, you can buy the put option, because put option gives you more leverage than just short the stock directly, because the option allow you to pick the strike price, higher than that. Then we go down, we monitor the 1 minute time frame. We monitor and we see that as soon as it rate the prior week to 2 cents, right? As soon as 2 cents itself, you see that it's gonna have a huge displacement in favor of the gap, and we saw the retest happen right after that. Then we know that the signature of buy side liquidity rate, then we can go in and short or buy a put option. In this case, let's say we pay a put option $1 above here, so maybe by $4.52. That will be a very good risk reward ratio setup for us. Yep, beautiful lesson learned for us. I think time is 1 hour. We are past 1 hour mark. But look, before we leaving, I just wanted to look at the DRN today, because it's Friday, so you see that DRN normally, not always the case, just to let you know, the DRN is very narrow, just in this case $1. Yeah, it's very narrow, it's not huge at all, especially right after 10:30. But let's look at the 1 minute. Excuse me. Okay, so the first right now, but you see that it, after I check that, it make another swing low, and then right here it make a higher low. Wow, what we gonna see? This higher low. Let's see when we see the setup yesterday. Okay, it might high low, with a low, and then boom. So yesterday is a little bit different than today. Then make a high low, now it have a high low right here, and you have order block and favor gap right here. See that? But anyway, I think we don't have time, and talk to you later. Thank you. Bye for now.